you need to put 10% non-refundable down within 2 weeks, but you've only just started talking about the mortgage. It's not going to happen. So if a client walks into a bank on their own and they receive what is called a simulation, which is a proposal, that's not a mortgage offer.
Today, we're talking Spanish mortgages, interest rates, and foreign exchange with Marc Elliott de Lama, founder of Fluent Finance Abroad, a whole-of-market mortgage brokerage operating across Spain with offices in Marbella and Sotogrande. Marc, you're very welcome.
Hello, Charlie. Thanks for the invite.
Cool. No, I'm really looking forward to seeing you because I went on your thing a couple of years ago, and now you're back here, so this is good to see. But as I know you, and other people out there may not so much, why don't you give us a quick snapshot of who you are, what FFA does, Fluent Finance Abroad, and the typical client that you can help in this area.
Okay, well, my name is Marc Elliott. I put De Lama on the back there because my mum is Spanish. So I've been brought up in a Spanish family, but I grew up in London, in the UK.
So you're fluent in Spanish?
Fluent in Spanish, by accident, really. So I'm quite lucky with that.
Yeah.
So fluent in Spanish, studied in the UK, went to school in the UK, and got into financial services in the UK. So I did my financial planning certificates, worked for Lloyds Bank, and then I got into the mortgage business in London for a company called John Charcoal, which was a great experience. And from there, I actually really enjoyed the mortgage business. And in 2004, I was lucky enough to get asked to come to Spain to become... No,
as an employee?
As an employee of a company called IMS, International Mortgage Solutions back then. They brought me over to understand and study the Spanish market because back then, obviously, there was a property boom going on here, and Spanish banks were lending quite freely, as we all know, to foreigners. Because of my language skills and my track record and my experience and education, back in the UK, it was quite a good idea for me to try and understand if I could become a bridge. In 2006, I created the company now, which is Fluent Finance Abroad. It was just myself on my own. And 20 years later, almost, next year, we're still here. Now, Fluent Finance Abroad is solely dedicated to understanding how the Spanish mortgage market works. We're a regulated, Bank of Spain regulated mortgage broker. The regulation came in 2019, which was fantastic. But that means basically that we're all qualified Spanish mortgage experts, and we're not just local. We're Bank of Spain regulated. That means we can operate within the whole of the nation of Spain and its islands. And our job really is to help people, whether or not they're Spanish or foreign, or understand how they can buy property in Spain using a mortgage to help them do that in the most optimal way possible. Mortgages are quite complex. Regulation is there for a reason because it is a complex subject that needs to be studied. And one of the amazing things that I think we do is that we spend all our lives building relationships with banks, not just one, but the whole of the market. And we spent 20 years doing that. That's quite a long time. So we've done quite a lot of work. We've established a lot of, nurtured a lot of relationships with a lot of different banks. So when a client comes to us and we represent a client, the balance of power shifts away from the bank. So, for example, if a client goes to the bank themselves, they don't really know how the system works. The balance of power is really and truly with the bank. But if they come with us and we represent them, we're responsible. We that balance of power shifts away from the bank more to the client because we're obviously dealing with multiple banks and we have a fantastically long track record. So when the banks are dealing with us and our clients, they have to be more honest and sharper on their rates, obviously, because they know that we can pivot and we can go to different banks.
So it's like having a lawyer with you when you have a problem. Rather than going sorting out yourself, you've got a lawyer who's an expert, who understands the way things work. And knows a language even, not Spanish. I mean, just the financial language, which many people don't grasp.
Yeah, for sure.
Yeah.
I think this is a complex road, and it's a road that we've been down thousands of times before. We've got a proven track record. We've helped thousands of clients buy properties in Spain. Right. And so if you pass the responsibility to us or a company like ours, you've really got a good chance of being successful.
You touched there on the fact that you the balance of power goes over to the client. What would you say are the best or the top reasons why go with a broker as opposed to going direct? I can imagine language. I can imagine when you go into a bank, just getting an appointment. So time. I mean, are those two of the biggest things? And then the nitty-gritty, there must be some real, nice stuff you can be better at than the client on his own.
I think it's a big responsibility. Now, a client obviously doesn't have to use a broker. They can take full responsibility themselves, and they can go to the bank themselves. And a lot of clients do that. And yes, you can be successful on that. A lot of people don't have. They may be sophisticated. They may have enough knowledge in their own country. But do they have the skills required in Spain? Obviously, the language. Can you read the small print? Do you really know are the processes that the banks go through? Do you really know that the conditions that they're offering you, are they the best out there? Mm-hmm. If you're prepared to take responsibility for that, then fine. There's absolutely no need. Yeah. But if you're slightly worried, or you slightly don't have the time, or you don't have the expertise, then using a broker, not any broker, because there's brokers popping up all over all the time now, but one with a long track record, a long history of delivering. Then you pass the responsibility to that broker, and that broker will, should get you the mortgage that you need to buy, but always with the best conditions. Now, it's really important that, sorry to go on about this, but a really good quality broker will be able to demonstrate that they've gone to multiple banks, not just one, their friend in the bank, whatever, or two. Under Spanish law, you have to demonstrate and show that you've gone to multiple. And that's what Fluent Finance Abroad will do.
You as a broker have to show you go to multiple.
By law, under the law it actually states more than one, which is a bit ambiguous, but because you can't really control exactly how many banks you can go to for any particular client, because some clients could be so specific that you can only go to one or two. But the broker should, by law, under law, if they had to go to court for whatever reason, should be able to demonstrate to a judge that they've actually done the job properly. And that's by going to various different banks,
20 years ago, when someone came to buy a house compared to today, do you find that more people, generally speaking, my clients got younger? There are people with a lot of money at a younger age. I suppose they've got to be clever to make the money, but do you think you're helping more people now or then? I mean, in 20 years, things have moved on. The internet, people can learn about how things happen. You can ask ChatGPT, how would I get a mortgage in Spain? And it'll spurt out whatever. It may be right, maybe wrong, I don't know. Yeah. Is that a big challenge?
What
just the change first of all.
No. I mean, when I first came here in 2004, there was a frenzy of buying. Yeah. The credit crunch hadn't happened, but we were in that wave of credit. So there was plenty of business around. Everything was being bought with a mortgage, because mortgage lending was so easy back then. So it was. Some people hark back to those days. I certainly don't, because it was insane, in my opinion, the way that they were lending. There were no checks and balances whatsoever.
Valuations were weird,
Valuations were bought, basically. They were fraudulent. At the end of the day, everything pretty much was fraudulent. It's a pretty sensitive topic, but it's true. So the fact now it's we're still seeing a lot of levels of transactions occur. No doubt you have more data on that than I do. But the quality of the work and the lending decisions, I feel, are much better now. Yeah. And I feel that the market in terms of equity, is quite strong. There's quite a lot of equity in the Spanish property market from my point of view. I saw a stat the other day that 11% of mortgage loans now are over above 80% loan to value. I'm talking nationwide now. And a lot of people are getting concerned about that. But in my day today, we struggle to do refinance work and raising capital. Whereas before in 2006, 2004, that was
easy.
Very easy. The norm, in fact. I mean, you could go to any bank and release all the equity out of your property, no problem. That is almost impossible to do.
Release is not
very difficult to do. Very difficult to do. And I think that's a good thing because essentially Spanish banks and legislators, not just in Spain but across the EU, they don't want people using their houses as cash machines like they used to do. And I think that's good for the market. It gives it that kind of stability. We're not seeing that credit bubble that we saw back in 2008.
What about, is there anything like specific for older people that want some genuine equity release? They have a house that's worth whatever, and they'd like to have $500,000 as a pension almost, but they have everything tied up in a property.
That's an amazing question, and to be honest, Charlie, it's something that as a company, Fluent Finance, are working on. We haven't quite cracked it yet. Okay. So it's called an equity release home income plan in the UK, or a lifetime mortgage. It does exist in Spain. It's actually got its own law, the Law 41/2007. So it does exist, but there are no or very few product providers, and so therefore it's very limited. But it's something which is going to come hopefully in 2026, and hopefully we'll be able to do another video on that. But it's something that we're working on, something that I believe in, that product, because I do see the value in offering people over the age of 65 who've invested in their properties rather than pensions, the ability to release equity and supplement their pension income. I'm fully for it. But there's nothing, I can't really say too much.
No.
Apart from that, it's something that we're working on.
Back when we can talk about it, please.
I'd like to talk to you.
Around the corner.
This is what I want to talk to you after this about.
All right.
But I can't really say a lot at the moment.
I'm not saying that. A lot of people accuse Sotogrande being the place you come to retire, and once you've done Marbella, you come here, and then once you've been in a big villa, you go into a big apartment, and then all that sort of thing. So. I don't know, but I think it's something that just makes sense. Also, I'm reaching that age. In fact, I passed that 65 years age, so it's a very pertinent one for me even.
But it's an amazing product. Like, let me give you an example. Let's say you're 85, you're a widow, you're 85 years old. Yeah. You lost your husband 3 years ago. Yeah. And it's quite common. Yeah. I'm thinking of someone at the moment. The fact that you've got equity tied up in your home, but you really don't want to leave your home. And there are studies that show that if someone of a certain age were to up sticks, downsize, change their environment, it can actually shorten their lifespan. Right. So this product is important, and it's something that we have to bring out. And I can understand why. Maybe a widow 85, if you wake up in the middle of the night to go to the bathroom, you know where the bathroom is, you know where your kettle is, you know where your comfy chair is, all your, the pictures of you and your family and your life are there. It must be difficult for them. To upstick, and it's difficult for the family as well. So I like this product. I think it's got a future.
Moving on, do you see a difference between someone looking for financing in Marbella to someone in Sotogrande? Is there something you can measure? I mean, I can't think of it, but maybe there is. Because you do have an office here. We have had your man in Sotogrande sitting in that chair, Julian, and it was a great podcast. But can you measure the difference? Because I'm definitely seeing Sotogrande is taking off. The secret is out. I keep saying to everybody the number of reasons why, but Marbella agents are coming to me. The reason is they haven't got inventory, not just me, but all the agents here in Sotogrande, looking for options for their clients who either can't find what they want in Marbella or decided that Marbella is not for them for whatever reason. I'm not going to poo-poo Marbella. I think it's a great place, but everyone has their own preferences. But when they come here, do you see a difference in that client?
Yeah, I mean, in Sotogrande has always been known as sort of old money. A bit more, I don't know, would the word, the aristocracy, would that be okay?
I think that's gone. I think most of that's gone. I think that there'll be a few families that still have their homes, that they're all down the Costa side, that the house is going to another generation, that the younger generation ideally want to be down there, but there's no space, so they can start coming up a little bit up the hill, sort of into the other zones. Yeah. So that's developing, but that's sort of gone now.
That's gone.
And I think when you think of there's a school here with 50 plus different nationalities, there are lots of different people here now. And there's the Gibraltar angle as well. There's many Gibraltarians who have their homes here. So it's very international, but I think due to infrastructure changes, the growth, the motorway, internet, is very different to what it was then. But yes, they're
what I've seen is that I've seen a lot. Everyone that invests in Sotogrande knows Marbella. Mm-hmm. They've probably had a look at Marbella first. Mm-hmm. Because that's the most famous part of the Costa del Sol. A lot of clients have invested in Marbella, realizes they need a change for whatever reason, and have moved down to Sotogrande. Right. I see a lot of that. So second-time purchases. Okay, they invested originally in Marbella, they're selling now, and they're moving down to Sotogrande. But generally, I mean, it's difficult to say, that type of person or this type of person. It's fluid. And I think as Sotogrande, now, Charlie, you remember this and I remember this, Sotogrande area, the same, where we're sitting in now, got hit pretty hard with the credit crisis. And it took a long time for it to start moving again. Am I right in saying that?
Yeah, I mean, we always say that whatever happens in Marbella sort of takes a little bit of a time lag, 6 months, 12 months, maybe a little bit more. I think one of the reasons things here were different was that, as you said, there are people here with money, and they had no need to sell, no need to just carry on, coming on holiday, doing their own thing, whatever. Some of them stopped playing polo because they didn't want to be photographed on a polo field. Which is a very different reason, because they didn't want everyone suffering, and they weren't. So if you go down the street, you would have one house, British guy, main house in Europe, in UK somewhere. This is a holiday home, big issues back home, therefore has to put his house on the market. Okay, next door, no problem. A millionaire. This is his third house. He's always been coming here. No issue. And like that, you went down the street. You maybe had 3 out of 10. Who needed to sell. The prices didn't go down here as much as it did elsewhere. I mean, I say maybe 30%. Whereas up the coast it was a lot more. And then what you had was people coming here, investors, sharks maybe, who bottom feeders, who really go down, and were making absolutely silly offers on houses. And of course, if this house sold for $1 million and it was $1.5 million, and the other house, then every house in that street is $1 million as far as they're concerned. So we're putting in offers, and there's a resistance. And I don't think that's one of the reasons why they didn't have to go down the prices, because there weren't that many properties that were suffering as much as made up the road.
Was there? I've got my own idea, but I mean, was there a lot of, back in 2015, a lot of distressed property down here? Was because of the banks from Gibraltar?
Yes, absolutely, and that's due to the squeeze.
Yeah.
I mean, I give you my own example. I bought a house that I paid a number on, and I had a valuation from a Gibraltar bank twice that amount.
Okay.
Twice that amount, and I just couldn't make sense of it. Why are you valuing this house at over $2 million when I was buying a house just over $1 million?
Yeah.
which so that was what's happening. So they were offering a lot of money, and I know several people here who had that sort of problem as well. That the reality was that the house wasn't worth what they were saying.
So for the reason why we invested in Sotogrande is when I first came in 2004, Gibraltar was quite prominent. There was a lot of banks in Gibraltar.
Mm-hmm.
Obviously, they were under pressure to get money out because that's what banks were doing at the time, and they were lending a lot in Spain. They're no longer there, so I can name them: Norwich and Peterborough, Barclays Wealth, Leeds Building Society. Those are the types that you remember, Juska Bank, and they lent a lot in this area.
A lot. Yeah.
A lot in this area, and that's when I noticed. And I used to do a lot of work with those banks, the Gibraltarian banks. And obviously, when the credit crunch came, then everything withdrew. They withdrew from the market, and that's when I noticed that Sotogrande, the area itself, went through a bit of a lull. But I always knew the potential of Sotogrande because of the time I spent coming down here. Looking at the types of properties that were around, looking at how the streets were maintained, and then I kind of got the feeling that things were starting to move. That's why I knew Julian from back in the day when he worked for Lloyds International, and obviously he got made redundant from there. But he was always a person of interest to me because of his relationship with Gibraltar and Sotogrande. And so we managed to hook up, and I think it was back in 2018. That's when I asked Julian to come on board and help me set up the Sotogrande office, because I saw that there's a massive potential here. It got hit hard with the credit crunch, I know it did, but that's just complete. That's gone now, right? You don't see any bank repossessions or anything now.
Very, very rarely you see one or two, but
that's all been tidied up, hasn't it?
Yeah. You see an apartment was on for auction the other day. There's a house the other day that went also for auction, but it's very, very little. It's all been tidied up. And what we suffered of was having no new builds, and now we've got a lot of new builds coming in. And there's Alcadesa as well, which is where just down the road there. I mean, the amount of construction that's going on there, which was all abandoned. That really got
That's right, yeah, Alcadesa got
all that. And a lot of that was Gibraltar money, because not everyone in Gibraltar could afford a house in Sotogrande. We had the bankers and the lawyers and all that, but down there, that's where maybe that collapsed, and you still walk around there, you think you're in Lebanon. So some of the buildings, which are now being taken over and being knocked down or finished, which is good news.
But this is what I'm saying. Lending is so important. If you lend responsibly and you get it out in the right way, and you don't lose your minds, people in the banks don't lose. Then you can have sustainable growth in an area.
I mean, what we have here as well is particularly in Reserva is plots of land, and banks don't lend on plots, do they? You have to have your it's your collateral. In fact, they might lend you to build, but not for the plot itself.
Exactly.
So that is something which is, so anyone coming in, we know has got some sort of solid base, because they're buying a plot for 1, 2, maybe even Niwa was probably 8.5 million. Just the plot. So that's the sort of base that we have.
How do you see Sotogrande going? I mean, you know better than I. Is Zagaleta opening up here? What's the latest? Well, what do I need to keep my finger on the pulse on?
I mean, Zagaleta is not in Sotogrande, as you know. It's past Sotogrande, and what originally Zagaleta bought was the bits of Valderrama. In fact, someone else who bought Valderrama, and what the pieces of land that Patiño had. One of which was the Valderrama 2 golf course and housing that he was going to do past the school, going up towards the Castellar. When Zagaleta bought that off this guy, they bought that. The club itself, the Valderrama club, was bought by the members. So the members recovered that, and then they shed the bits and pieces of land that they had. So Zagaleta, and if you drive up there, it says something about the new guys, because now Zagaleta's been bought by not Dubai, the Emirate, Abu Dhabi.
Saudi?
Abu Dhabi, I think. Monca, something like that they're called. and they will or not develop it. I don't know. I think it'll take time. I think we have enough to develop here for a while. I don't think that piece of land is necessarily right. Having said that, they do have a very good town hall because it's not in San Roque, it's on the other one, and they're really desperate for work and to get business going and everything else. So
right.
I think getting permits would be easy, but who knows? But it's past Sotogrande. And
Right.
this is another thing. You look at the map there, Sotogrande is quite finite, but everybody's trying to bolt themselves onto
Do you see it expanding?
No. Not with the current people. I mean, the current owners of Sotogrande SA, Orion, I don't think they want to do more here necessarily, because it's a very long-term project. There are one or two people who've taken a punt. Chris Byrne from Polo Valley, there's a piece of land by the port there that they've launched and mentioned 350 million investment between up there and something closer to the Polo Club. So there are people talking about it. And it takes these sort of conversations to start, but I think it's a 15, 20-year window before we ever see anything like that. I don't know, but you never know. I mean, it's...
Do you see similarities between, let's say, 10 or 15, 20 years down the line of Sotogrande and Puerto Banús, and how the area surrounding Puerto Banús has just exploded?
No, I don't. I think that the infrastructure of the port is very different to the one that exists in Puerto Banús. You don't have the ability to have these mega shops. I think they tried in the marina, and I remember when that marina was starting and all those empty shops were there, and the guy who was running it, an Irish guy, he got his marketing so well done. People were coming asking for where the shops were, but they hadn't even started.
Right.
And I can't see Gucci shops and these type of thing at all. One of the things that makes Sotogrande what it is that we have no serious nightclubs. It's not a nightlife type of place. You have restaurants, people go out and have fun, and they go home. It's part of the DNA. Originally there were no restaurants at all, and people just entertain themselves from house to house. Then little by little they started coming up. But no, I don't think that's going to happen here for a very long time, because you just haven't got the psychographic type of person that wants that. You get the kids saying we need to do something, and they go up to Marbella. In the summer there are pop-up nighty things. The after polo was one of those, which may have gone actually. But there are things that it's not the same.
Our office is in Pueblo Nuevo,
Yeah.
the Guadillaro,
Yeah.
just there. That's a service town to Sotogrande. Would I be right in saying that?
Totally, yeah. That was a thing originally. As you probably know, when a developer comes, they have to give the town hall 10% of the value of what they just bought, or 10% of the land that they just bought. And McMicken, who's the original founder, I think he gave that as a 10% of land,
Right.
and that was a service village that was set up. Anecdotally, I don't know whether it's true or not, but it probably was one of the richest per capita villages in the whole of Spain.
Doesn't look like it.
Because every electrician, every builder, every bricklayer, every caddy master, they're all there, and it's fantastic. I mean, it's a genuine little village today.
Yeah.
And these boys have their offices there, and it's a hustle and bustle of a place.
Cool.
Which is blowing up. It really has no parking problem, but it's got a rugby field.
It's got a rugby field, yeah.
Yeah.
We're in front of that.
Yeah, in front of that, yeah, exactly.
But obviously we've invested in the area, and it's and people are interested in investing in property, aren't they? So they look.
Yeah.
I think people are looking to Sotogrande to see if it's going to grow.
Yeah, I think it's also. I always say that anybody that went to Marbella area 30 years ago in their 30s and 40s are now in their 60s and 70s, and it's not the place it used to be. I can't go to the Golden Mile driving through Banús area without sitting in a traffic jam most times of the day. Certainly in the mornings, certainly in the evenings, certainly at lunchtime when people are moving around, you're stuck there. If someone goes to La Zagaleta, even to Sierra Blanca, to get down to the restaurant will take them some time. And from here, because of the motorway being so good, and because it's got toll road, it's got tolls,
Yeah.
that's why people don't use it. You know, it'll solve the Marbella traffic problem if there were no tolls on the motorways, because everybody would use it.
Of course.
You know, it's. I can get to a restaurant and take me. You live in San Pedro. If you want to meet in Banús, you be there. I can leave 10-15 minutes before you, and you'll be there at the same time.
Exactly. Yeah.
So it's not. And it's all relative. You know, if you live in London, you need to go to the other side of London. It could be an hour and a half.
It does.
Yeah. So
it certainly does.
It does take time. Walk us through the client journey. Okay, so I have a client that comes in here and says, look, I love that house, I have some money, but I think I need a mortgage. And I say, I know the guy to go and see, it's Marc or Julian. And I've done them, I take them by the hand, and I usually just leave them there because I walk in. It's none of my business what happens after that. So what's the journey that you take them through? I mean, you ask them a load of questions, which they need to demonstrate to you, presumably, that they are capable of even being, interviewed for a mortgage, let alone anything else. What's that journey for a typical person?
Okay, so we have
someone who's listening, who's saying, okay, I'm interested in this guy. Yeah. Sell him.
Okay, borrowing money from any lending institution in the current climate is not a walk in the park.
Yeah.
You're asking an institution to lend you money, co-invest into your idea of buying a property in Spain. And so don't be surprised if they're going to ask you a lot of questions to get to know your client, KYC. So that's the first thing that we would insist on, is having a good quality discovery call to see what the client can bring to the table in terms of income, capital, and those things. The ideal client is someone who's done their homework before they search for a property, but a lot of the time they see the property first and then they try and, which is difficult because there are a lot of hoops to jump through, a lot of questions, a lot of tick boxes to be ticked, and that unfortunately that does take time. So we have to sit down with the client. We have to understand their situation, their fiscal situation, and then try and see if it makes sense to put forward to a bank. Mm-hmm. If it does, fantastic. So they've got enough cash to put in, they've got enough income to service the loan, to demonstrate affordability, they fit the age criteria, that type of thing. Then we need to ask for a lot of documentation to back up their story, because obviously, it needs to be backed up. Yeah. Now, I want to mention that everything that a Spanish bank does is regulated by Spanish mortgage law. That means the Bank of Spain have overreach and oversight on everything, on any sort of lending, whether it be €50,000 mortgage or to 5 million or 50 million. The Bank of Spain will have overreach. So it doesn't make any difference if it's a 50 grand mortgage or 5 million. The banks are going to have to go through the same rigmarole. Yeah. Now, it's a rigmarole, and it does take time. This is the problem. It takes time. We have to receive the documentation. A lot of our clients are extremely busy, and they haven't got time to get themselves organised. A lot of clients are very organised. We love them. They're fantastic. Within a couple of days we have everything. Once we receive the documentation, we then have to analyse it and optimise it, and we package it into a nice little package, like a little regalo or a little present, and we send it out to the number of different banks that we're going to go to. You
are convinced that individual, that client of yours, can service that mortgage.
Yes.
Okay, because you've done your checks. Then you present it to the bank, and they presumably do their own checks. Yeah. I'm not going to take your word for it. They're going to go and do all of it. But
we have to do intense research, fact finding, discovery on each client, because please don't forget that we're a business, and we get paid on success. So before we take on a mortgage application, we have to be 99.9% certain that we're going to be good. Yeah. And so we do a lot of discovery, a lot of work before it gets submitted. So it's not like we just throw stuff against the wall and fingers crossed it sticks, right? We don't do that. Yeah. And I want our clients to understand that. Yeah. So we are quite rigid, not rigid, but we will insist on getting to know the client very, very well before we accept a client to work on, because essentially we make a promise to people that we will be successful for them. Yeah. That's our promise. We're responsible for them. Mm-hmm. And so therefore, we have to do that. So we package it up. The banks will receive it in a manner that they like and that they understand, and they have to do minimal work on it. Banks like that, because they want us. We try and make their job easier. Again, that's why they love working with brokers. And then what they do is they just check it, and then once they have a few questions, we answer a few questions we may have missed. We may need an extra bit of information to explain a certain situation, like dividends or something, and then it goes up to the risk department, underwriting. Everything has to be underwritten. Yeah. Everything. Mm-hmm. So if a client walks into a bank on their own and they receive what is called a simulation, which is a proposal, that's not a mortgage offer. Mm-hmm. You get that from the branch. The branch that's like a guide. Yeah. Please don't think that's a mortgage offer. It's not. You will only get a formal mortgage offer once underwriting has risk assessed it and authorised it.
So could that be a pre-approval? You can get a good sense of that.
Charlie, a pre-approval from us or from a branch manager or someone in the branch is worthless. An agreement in principle, formal one, is once it's gone up to underwriting and come back. Yeah. It's a really important difference. A lot of clients think that they've been in to see their friend in the bank and they've got a little piece of paper which says simulación. They think that's a mortgage offer. It is not. It's quite dangerous.
I asked the question on purpose because I've had that with the client who was, I'm pre-approved, I'm ready to go, this and the other, and I can go up to this point, and we had an offer, went back to the bank, and it bounced.
It happens all the time, and I think it's something that the Spanish banks need to be a bit more conscientious of. Obviously, they have their targets. They want you to stay in the bank. They don't want you to speak to other banks, so they will try and make it as attractive as possible, convincing as possible for you to stay there. But it's not an approval. Right. It's not formal. So that's what we would do, and then we would then get a number of different offers back, and that's when the brokering element comes in. So we will show our work to the client, say we've got 4 different offers. Clients say, I really like that, I really like that, I don't like that, I don't like that. Can you go back to the banks and sort of negotiate for me? And that's when we sort of negotiate with the banks, and see how keen they are for the business. And the one that is the keenest will win it. Yeah. We don't. To be honest, this is really important as well. We charge broker fee because we don't care which bank you sign with. Some banks will pay commissions, introduction commissions to people higher than other banks, but we don't. We honestly don't care which bank you actually go with, and I think that's demonstrated once in the work that we do.
Absolutely. Loan to value generally, just for anyone who doesn't know.
Maximum is 70% for a non-resident, 80% for a resident. If you're under the age of 35, you could potentially get a little bit more for if you're a Spanish tax resident. But for non-residents, 70% is the maximum. That's the ceiling. You cannot go above that. You can only go down. Yeah. Actually, there is one bank that will consider 75%, but the interest rates are a bit higher because the risk is slightly higher on that.
At the moment, we have turmoil in Europe. We have a Spanish economy which seems to be doing rather well or better than the others, certainly from a growth point of view. You wouldn't believe it when you hear what's going on the radio and how they all attack each other and this sort of thing. Is that giving Spain the reason why the interests are so low? I mean, money is cheap here compared to other places, I think. Am I right in saying that? So, is the bubble going to burst, do you think? Is it something that's... What from your point of view, how do you say something? How would you answer these questions to someone who's asking for a mortgage or asking you to find a mortgage for them and wants some sort of security? Then, of course, you get the thing of whether you want a fixed interest or you want a variable one.
Yeah, so if you're worried about the future, obviously, and you're going to have your mortgage long term, I say long term, longer than 5 years, getting a fixed rate mortgage is a really good idea, because you're fixing the interest rate, you're fixing the payments. So no matter what happens, you know that your payments aren't going to go up. So that we saw interest rates go up quite substantially when the war in Ukraine started. Yeah. Inflation went up, interest rates went up to counteract that. Yeah. I know, because I've got a variable rate mortgage, and that my payment went up quite a bit. It's now gone back down again. If you don't want that kind of stuff, then you're committed to the investment for over 5 years, then a fixed rate mortgage is a really good way to hedge against any issues in the future. But what's going to happen in the future, Charlie, I have no idea. There's too many things going on in the world right now. What's going on in the States, what's going on in China, Taiwan, whatever. But Spain in general is okay. I think the banks are lending in a good way. They're not overextending themselves. I should know, this is my business. I wake up every morning looking at how banks are lending, and so therefore the property market I think is still got a lot of equity in it. Since Corona, since the pandemic, Spain seems to become more and more popular because of remote working, the weather, the lifestyle, the food, the culture, the welcoming culture of Spain. We got some guys here just out of university from London. They've moved back to Sotogrande. Why? We could ask them why. Why did you do that?
I know why.
London's a great place to live. Yeah.
Well, is it? You've got to have a lot of money in your pocket to really enjoy London. It can be a slog, and I mean, kids can't get on the property ladder these days. I keep repeating this thing. I bought a house in Barnes, and I was 35 years old, for 250,000, a semi-detached. Today's worth 3.5. You
won the lottery there, Charlie.
I won the lottery. No, I sold it too early. It's worth 3.5 now. And no one at 35 going through a normal job, not an entrepreneur, can get anywhere near that these days, and it's so unfair on the younger kids. It's just not. Well,
the pandemic was awful, but it did show us that we can remote work now. We can work from anywhere, and that's great for kids. They don't have to be stuck in London because of that's where the jobs are. Exactly. So they can move about. So that's another thing that we need to worry about, is all the influx of kids coming over here.
Good of them. Let them come.
They're going to need nightclubs, Charlie.
Yeah, we will. No, they're all sort of very healthy and play rugby and stuff. They have to go training. One last boring question: fees.
Yes.
They seem to be coming out of. You go to the bank and there's the fees for opening fees, broker fees, notary fees, registry fees, real estate people fees. In your world, what is that? The bank fees?
What, a broker fee?
No, the banks.
Yeah. So when you take out a mortgage, there's normally a mortgage arrangement fee. Yeah. So they calculate an interest rate, and they work out the margins and the profits that they're going to make, and they like to take some out up front. The reason why that's important is because in 2018, Pedro Sanchez, it's all about tax. So before 2018, borrowers who wanted to take out a mortgage had to pay something which is called an AJD tax, which is Actos Jurídicos Documentados. So you had to pay tax on the mortgage that you took, which roughly works out about 2.35% on the amount that you borrowed. It's calculated on the whole responsibility of the mortgage, but that's just too complicated to go into. So for every 100,000, a borrower would have to pay 2,350 in tax. So Pedro Sanchez, in his wisdom, decided that's not really fair on borrowers, and has made the bank pay it. So when a bank says they're going to charge you 1.5% or 1% or 0.5%, some of that's going to go to pay the tax. Right. That's quite important to understand. Yeah. And so there's a mortgage arrangement fee. Also, Pedro Sanchez said that if the mortgage registration cost, the notary cost and land registry, the borrower had to pay that as well before. he said that was unfair, and so he's got the banks to pay that as well. So you don't have to worry about that anymore. So the only thing really that you need to is the mortgage arrangement fee and the cost of valuation in terms of the mortgage. Everything else there is borne by the bank in 2018.
Plus, of course, if you're buying, you need to have maybe a surveyor's fee and all that sort of stuff. But that's not to do with the bank. That's
no. I mean, the banks will try and flog you life insurance, home insurance, bank accounts, and that type of thing, credit cards and stuff. So you need to be aware of the small print on those types of things.
What are deal killers? The common deal killers that you find?
Okay.
What shouldn't people bring to you? Because that would know it doesn't work.
Deal killers are when someone hasn't done their homework, so they fall in love with a property, and then they realise that they need some money, extra money to help them buy it, and that's a massive deal killer. So when we've actually got there, we sit in front of the client and we say, do you have this, do you have that, and some of the answers come back no. Or another deal killer is like they've seen a property that they've fallen in love with, and the vendor doesn't really care if you're mortgage ready or not. They're going to want you to put down a non-refundable deposit within a few days sometimes, or even a couple of weeks, but you just haven't got time to get yourself in shape in order to organise yourself. That's a big that's hard.
So you've got to get ready. You mean not the deposit and take the thing off the market, it's the 10%, the private contract,
what we call ADAS here.
Yeah.
Because if you're to do the deal, you need to put 10% non-refundable down within 2 weeks, but you've only just started talking about the mortgage. It's not going to happen.
No, and I never say 2 weeks. I say as long as the due diligence, the legalities that are able. If you can deliver it, Mr. Vendor, to the lawyer of the buyer, and he can do the legal due diligence in time, and he's happy for that, then you should sign on the property point of view. Now, if you haven't got the money to pay for it, for goodness sake, don't sign. Or sign a deadline which is well within the time we require to get your mortgage. And I assume that within 3 months, most banks can tickety-boo a mortgage time. So that I say 90 days is
90. Well, if you could negotiate 90 days for someone to put the 10% down.
Oh no, not the 90 days.
No,
90 days to closure.
That's right. Yeah, but this the 10%. That's the killer. That 10% is non-refundable, Charlie. So it could be 100 grand if we're talking about €1 million house down here. That's a lot of money to put down without knowing that you've got the backing of a bank. Now, what I did when I bought my house is obviously myself and my wife, we were looking at properties, but we didn't make any serious offers until I had my mortgage ready. And then as soon as I saw a house, I would put 10% down the next day. No messing.
But were you pre-approved? So pre-approved.
Pre-approved from underwriting. I got 6 different offers because I knew what I was doing, and I knew I had some pretty amazing offers there, and they were from underwriting. So I wasn't firing blanks. I had bullets in my gun,
and so to make sure the bank wouldn't know what you're buying.
Oh, for sure,
but valuer that's and all that sort.
Exactly. So, but then the asset, I knew that the collateral was good. Because I've researched the market, but I didn't mess around.
What about source of funds? That's a big thing, isn't it?
Yeah. So the banks, your co-partners, if you want to call them, will want to know who you are, where you got your money from. So they will want proof of that. So if you've got it in savings, if you've got on share options, we need to see statements of that.
Any sticky countries? Because someone told me the US is quite difficult. Money from the US. If you got money in the US. No more difficult than anything else?
No, not at all. It's absolutely fine. Right. The USA is absolutely fine. I mean the normal countries that you need to be a little bit, you got to be careful. Anti-money laundering and all this kind of stuff. The
other one that I find is a killer is a tax status. People come in here and start looking, and even thinking of putting offers in. Because I'm long in the tooth now, I can sit down with the client very confident and says, "What's your tax status?"
Yes.
And they look at me like, "What are you talking about?" Well, if you're here 181 days, you would be tax resident in Spain de facto.
Yeah.
And that education is so important for them to understand that they will come for you. If you come here. That's one of them.
But one thing I'd like to mention is, and you know, we have access to all the different types of banks. So in this area, we got a lot of high net worth individuals with tax structures and situations which are interesting. Now we have, you know, those types of clients who are high net worth will probably struggle to try and get a mortgage from a normal retail bank. What I mean by normal retail is someone, you know, that you go down a high street like, you know, Santander or Sabadell, BBVA, or one of those, the normal retail. There's nothing wrong with those banks. They're absolutely fine. But once you start going into the high net worth bracket, you're going to struggle to, if you have a complicated tax situation, you're going to struggle to explain that to a retail bank and retail underwriters. Now, the beauty of us, because we have the freedom to talk to whichever lender. We have banks that are more boutique in the sense that they're private banks. For example, you know, banks like UBS or something like that operate in Spain. So any of your high net worth individuals who are complicated, we probably wouldn't really expect to have much success from the normal retail banks. We would probably go what we call the Harrods type or
Kutsi type banks.
Exactly right. Who are more in tune with those types of lenders. So again, it's horses for courses when it comes to banks. So when we're talking about tax status, you know, we can have an open conversation, like you can have an open conversation, and then find a solution from there. It works quite nicely.
Very good. Marc, we've been on and on a little bit. It's been really good to have you on. Anything else? Anything I didn't ask you I should have done perhaps? So
one last thing, sorry guys.
No, we get...
So, it's really a really important thing. So we get clients from all over the world. And under current Spanish mortgage law, banks have to offer a mortgage in the currency that your main income is earned in. So for example, you could be living in Tokyo in Japan. You may work for a big investment bank over there, and your earnings are in Japanese yen. If you wanted to buy in Spain with a mortgage, the bank will have to offer you two things. They have to offer you a mortgage in euro or in yen.
Okay.
And that's the same in any currency. So you could be Polish zloty, you could be Hungarian florins, US dollars. A lot of Spanish banks don't have that capacity to offer multi-currency mortgages. And so we need to be careful as to, you know, how we approach this. So if you're from New Zealand and it's the New Zealand dollar, there are only a few banks that will offer you a mortgage here, because they have to offer you a mortgage in the currency that you earn it. So again, these things are complex. They need to be understood. They need to be researched. And so therefore, the earlier you come in and ask the question, you know, can I get a mortgage? How can you help me get a mortgage? That's really important as well. I think get to Fluent, speak to an expert, speak to Fluent Finance Abroad as soon as you can, so that you know you can prepare properly.
Okay. Good. Well, guys, there you are, Marc Elliott, Fluent Finance Abroad. Anyone looking for any sort of mortgage for buying a purchase, a property in Sotogrande or in Marbella, he's the man. Marc, thank you very much.
Thank you, Charlie. Pleasure.